Caria. Good morning, everybody. I take over the leadership of Finance and Investor Relations, and I'm aware of this great responsibility and thankful for the trust that you're placing on me. In my last experience, I was the CFO in charge of the private equity of Partner Investimento companies in Latin America. Before that, I was the CFO and Administrative Officer of the Grupo Ultra, CFO at LVMH, and Planning and Controller Director of Telefônica, besides having worked for a few years in consultancy companies as well. I start at Mills very much excited with the challenges of transformation and growth ahead of us, and I am available to anything that you might need. Now, the highlights of the first quarter. Thank you, Carol. On slide 3, I would like to highlight the most relevant aspects of this quarter for the company. And we started 2022 aware of the challenges in the macroeconomic scenario, but confident in our capacity to deliver results, our growth and transformation. Our priorities for the year are diversification of products with new growth verticals, focus on M&A opportunities, and acceleration of the integration learning curve. Organic growth by means of acquisition of equipment and the opening of new branches, evolution of processes and systems in order to have an improvement in performance and expanding our margins. And we intend to go ahead in our journey, our ESG journey for the System B certification, thus generating more and more positive impacts for our society. We achieved a net revenue of 235 million in the quarter, with a growth of 53% year-on-year. Advancing in price increases as well as the volume rented, and we continue to be bullish with the expansion of revenue because of the great demand in many sectors of the economy, including infrastructure, as well as our initiatives to increase the concept of penetration of the lifting platforms in Brazil. In spite of a scenario of higher inflation rate and interest rate, we increased our operating efficiency and we expanded our EBITDA. We also improved our capital structure with the conclusion of the 6th debentures issuance in March, amounting to 300 million reais. We reinforce our commitment with value generation, reaching a ROIC of 24% and rental 19% on consolidated result in the last 12 months, that ended in March 22. We continue to be focused on our strategy of organic and inorganic growth of the rental business unit. And in January, we concluded the second and the last stage of the acquisition of Autoplat assets, increasing our fleet by 122 machines and acquiring a diversified client base. Another important move was the signing of the purchase and sales agreement of Techpar. Besides increasing the fleet of the company, it also increases our client base in the state of São Paulo. The amount was 45.8 million, bringing synergies with the optimization of operations. Now going to slide number 4, we can see that we made important acquisitions aligned with our strategic objectives. As of 2021, we went ahead in our inorganic growth strategy and we made important deals, increasing our fleet by over 1,300 machines and allocating over 200 million in capital, already considering the Techpar acquisition. All the acquisitions are aligned to our strategic objectives, which are improving the client experience, increasing our coverage and our penetration in the market, and strengthening our leadership position. These acquisitions show our capacity to generate value by means of M&A operations, increasing the availability of machines by means of well-priced deals. On slide number 5, we can visualize the main benefits that we obtained from these acquisitions. With the acquisition of Best, besides the expertise in low-level access equipment, we strengthened our initiatives related to digital transformation, and Nest is a driver for innovation by means of which we will increase the evolution of processes, automated solutions, and implementation of new facilities for our clients, aiming at improving gradually their rental experience. With these acquisitions, we gained speed and quality in the integration process, besides bringing in-house the new business models, as well as the opening of new branches in areas of interest and development of new suppliers in maintenance, and an improvement in the capacity to negotiate with our suppliers. As we can see on slide number 7, we show important advances in the results of the first quarter of 22. Consolidated net revenue in the quarter grew 53% year-on-year, amounting to 235 million reais. And this is the best ever level since 2013. This growth was relevant and mainly because of the higher rental revenue, 58% higher, also year-on-year. And this increase in revenue comes from the increasing demand in many sectors, as well as from our initiatives to increase our market coverage. There has been an increase in the volume rented and also the average ticket in both business units. When compared to the previous quarter, the growth was 7%, as we can show on the rental revenue chart by sector, and the construction sector represented almost 43% of the total rental revenue in the period. And the infrastructure sector has a very strong pipeline of projects that will be happening this year and the next few years, and we will be mapping opportunities for both business units. The extensive footprint of our rental revenue shows the evolution of the activity of rental in Brazil and the success of the implementation of our diversification strategy. We already have almost 8,000 clients. Going to slide number 8, we show the performance per business unit. In 1Q22, the rental unit net revenue was 202 million reais, an annual growth of 53%, driven by the higher rental revenue, increasing 58% in the period. And the 70 million increase in the rental revenue was due to the increase in the average ticket and also the volume rented. Sales revenue had similar levels in both periods. In relation to the fourth quarter of 21, the rental unit net revenue grew 7%, also due to the higher rental revenue, and the sales revenue had a drop of 20% in line with the company's strategy vis-a-vis the global stress in the supply chain and the delay in the delivery of new equipment. By the end of April, we received 37 machines of the 1,300 that we ordered. We closed the quarter with approximately 8,700 lift platforms. And this number already considers the second stage of the acquisition of Autoplat and the transaction with Rohr, which was announced in March, totaling 268 additional machines in these two transactions. Analyzing formwork and shoring, the net revenue in the first quarter grew 50% year-on-year due to the higher rental revenue that increased 55% in the same period, as a consequence of the increase in the average ticket as well as the rented volume. In relation to the previous quarter, net revenue grew 12%, mainly because of the higher indemnification revenue. Now going to slide number 9, we see irrelevant growth of the consolidated adjusted EBITDA in the period. The consolidated adjusted EBITDA at 1Q22 reached 107 million, 46% margin, practically twice the amount that we had in the previous year. In relation to the fourth quarter of 21, the adjusted EBITDA grew 15%. Analyzing the rental unit, the adjusted EBITDA reached almost 100 million reais, 97 million, 87% growth year on year. And going back to 48% margin, almost historical levels. The good performance is because of the revenue, higher volumes, and increase in prices, besides the higher gross margin, ex depreciation that went from 67% in 1Q21 to 76% in 1Q22. As mentioned in the last quarter, we believe that operating management with excellence extends the useful life of our rental assets, maximizing the cycle of profitability, guaranteeing an excellent service to our clients. We believe that the intensive use of technology in our activities will be generating more opportunities for cost reduction and also the tapping of new opportunities as a percentage of the net revenue. Operating and administrative expenses had similar levels of approximately 30% in the period. Now going to the formwork and shoring, adjusted EBITDA reached 11 million reais, a 32% margin, vis-a-vis adjusted EBITDA of 3 million in 1Q21. Now I turn the floor to Camila Conrad, our Investor Relations Head. Her microphone is mute. Now going to slide number 10, we show the evolution of the net income growing 50% in relation to the first quarter of 21, 41 million reais in this quarter, net margin 17%, vis-a-vis 5% margin in the same period in the last year. This increase of 33 million, the net income, was because of the increase in the EBITDA. When compared to the fourth quarter of 21, there was a reduction in the net income of 6%, mainly because of the deduction of taxes that occurred in November 21, because of the distribution of interest on equity amounting to 20 million reais. Trying to maximize value generation for our shareholder, the company channeled 100% of its income ex legal reserve as remuneration to shareholders and the plan for share buyback. And this maximization in the distribution of income comes after the end of a cycle of consecutive losses with no negative impact on the initiatives of the company. As published on May 4, there will be payment of additional dividends amounting to 13 million reais on May 13, amounting to 59 million reais remuneration to shareholders, referring to the year of 2021. As mentioned in the results conference of 4Q21 in January, we concluded the second share buyback program. We acquired 8 million shares, equivalent to 3% of the capital stock. On March 18, we approved the cancellation of 6 million treasury shares, as well as a new share buyback program authorizing the acquisition of up to 15 million shares. So far, we have acquired approximately 2.4 million shares in this new program. As you can see on the chart, we show the adjusted operating cash flow, 69 million in the first quarter of 22, 5% higher quarter on quarter and 91% higher year on year. The adjusted free cash flow was 34 million in the quarter due to investments made in the period. Now let's look at the ROIC and ROE chart, where we can see a constant evolution in this quarter. Consolidated ROIC 19%, in the last 12 months, ROE 12%. The growth in these indicators comes from the long-term view and the discipline of Mills in the capital allocation of the company, besides constantly seeking to maximize value in spite of scenarios of increasing interest rate and inflation. And on slide 11, we show our debt profile on March 31st, 2022, 100% pegged to the CDI. We closed March with cash of about 529 million and gross debt of 430 million, amounting a net cash of 99 million. Our cash position already considers 300 million reais raised by means of the 6 debentures issuance at an average rate of CDI plus 2.73% a year. And this new issuance allowed us to extend the average term for payment to 2.8 years and reduced our average cost of debt, CDI plus 2.9%. In April, we obtained an increase in our rating attributed by Moody's from BBB plus to A minus, confirming our solid situation of liquidity, capacity to generate cash, and leverage. Mills is in a favorable competitive position to tap into the growth opportunities with value generation, giving its strong balance sheet. Now, we would like to open for questions. Now, we would like to open the Q&A session. In order to ask a question, please click on the Q&A icon on the lower part of the screen and write your name, your company, and language. When you are announced, a request to activate your microphone will appear on the screen, and then you should unmute your microphone and open your camera should you wish to do so. The next question is from Mr. André Santana, investor. We will be opening your microphone so that you may ask your question. Mr. André? We have a question from the website. Congratulations for the results. What about your initiatives of getting into new segments with the yellow line? Andrea, thank you for the question. As you can see, we have 530 million in cash, and we are very sound in relation to the company's net debt, which will give us a comfortable level to analyze organic and inorganic investments in new product lines. So we will continue to focus not only on organic expansion of lifting platforms, but also we will be considering the consolidation of the market. And for the next few months, we will be seeking to diversify and getting into new lines of products. Carlos, analyst, you may ask a question. Good morning, Caria and everybody. I would like to congratulate you for the result. And I would like to ask about the occupancy rate that you published this quarter. And how do you see the evolution from now on? We see a very strong growth in the infrastructure sector, and I would like to talk about the occupancy rate, whether it is slightly lower because of the new acquisitions, or is it because of you're avoiding cannibalizing prices? And one of the major projects in infrastructure in the next few months already starting will be the new Dutra highway. How are you positioned vis-a-vis the new Dutra highway? Congratulations again. Thank you very much. Thank you for the questions. I would like to start by the utilization rate. We had a slight decrease vis-a-vis the fourth quarter of 21 for two factors. There is a seasonality factor at the end of the year. In December, you have some stoppages in some industries and some projects are suspended because of the year end. And this impacts mainly January when we have the machines coming back, and then we get into this new cycle. You see an increase. And we made acquisitions of two companies, mainly Roar came with a very low utilization rate, some machines needing maintenance and overhaul. And the deal that we made brought about an impact on the utilization rate. If you look at the volume rented, it increased compared to the first quarter of 21. And given the demand that is already increasing, we are looking for price opportunities. And this is something that we did in the first quarter of this year, price increases between 8 and 9% of our average prices compared to the fourth quarter of 21. Talking about infrastructure, the second question, we are bullish about it. In Valor Econômico publication, there was an article that was very good, and what we can say about Dutra, the new Dutra, we are making projects. We worked there in the past, and they tried to renew the contract. And we worked in the projects of Dutra, and undoubtedly, we are focused on that, and we expect to be able to close this deal not only with formwork and shoring, but also with lift platforms. And this is a very interesting opportunity for the next few months. Vinicius Esteves, and sell-side analyst. Thank you for the question. Congratulations for the results. I have two questions. What about the pipeline of the new machines and price transfers and increase in the average ticket for the next few quarters? Two questions. Vinicius, thank you for the question. Going to the third part of your question regarding the pipeline of machines to be received, as I said, we only received 30-something machines in the first quarter, and the bulk of the 1,300 machines is concentrated in the third and the fourth quarters. They should be received in this time frame, and this is why we are decreasing our speed in the sale of semi-new equipment in order to offset this delay. The delay that exists in the supply chain regarding the transfer to prices. We expanded our margins. Of course, because of the increase in the average ticket, we are doing this, we are transferring, we increased our gross margin as well as the EBITDA margin, mainly because of the price increases that we were able to establish. In the long run, if we look at the rental rate of the equipment, we carried out all the analysis last year, and it already made sense in terms of the IRR, and the dollar was a little bit more appreciated, so it was higher. It is about 5.1, 5.2, which improves the rental rate. But undoubtedly, We continue to be focused on this expansion. Unfortunately, we have to transfer this in order to be able to maintain our margins. Carlos would like to ask an additional question about the Phoenix project. He's going to ask the question live. You improved many machines, you overhauled many machines. And this is a very good thing for EBITDA. And what about the current stage of this project? We continue to be focused on the liberation of the equipment for the Phoenix project. We suffered some impact regarding the delivery of spare parts, also because of the delays in the supply chain, but we intend to finish this 100% by the end of 2022, thereby improving the availability of the machines and, as a consequence, bringing a better result for the company. Henrique de Carvalho Martins, analyst. Congratulations for the results. Could you talk about your plans to add new lines to your machine portfolio? Your question is similar to André. As I said before, we have a very robust cash, 430 million reais in cash, and we continue to be cash net. And this will give us opportunities to consider the diversification of products, not only in what regards inorganic growth, but also organic growth for these new lines. And we are very much focused on that. And for the next few months, we intend to announce which lines of product will be coming into our portfolio. And we have all the necessary competencies, not only the penetration. We are going to open an additional 10 offices this year. Besides the 44 that we have, we already have almost 8,000 clients. So we have many strengths, and that allow us to deliver a quality and the additional diversification for our clients. Camila, how many new branches are you going to open this year? Camila, thank you. We intend to open an additional 10 branches within 2022. And our objective in strategic terms is to continue to expand our footprint, getting closer and closer to our clients, and thereby improving their experience in terms of the availability of the equipment, the speed of delivery, and having the necessary technicians and spare parts close to them. So we are focused on this geographic expansion. The Q&A session has There is another question. The Q&A session is not closed. It's from Mauricio Ramani. Congratulations for the results. Could you talk about formwork and shoring, and which were the reasons for the strong results in this area? Hi, Mauricio. Thank you for the question. The result from formwork and shoring comes because of price improvements. We have been increasing our prices as well as the lift platforms. We have the same situation in inflation, and this increased the price of acquisition of new shoring and formwork, and we have to increase our prices. This was something that we were doing already, but now we are doing this faster. So we are improving the prices and the volume rented. And in this quarter, more specifically, we had an indemnification that had a positive impact on our results. So the price and volume increase in the rental of formwork and shoring and the collection of this indemnification, which brought a very positive result as well. There is a question from? Well, he was not able to get into. There is another question from Pedro Cardoso from the sell site of 11. Good morning, congratulations for the results. I would like you to go into details about the average age of the fleet, which are the main impact on this line, and is there any risk coming from the higher maintenance costs? Pedro, thank you for the question. In the fourth quarter of last year, we showed a little bit of our process of lean manufacturing, lean overhauling, not manufacturing. And over all these years that we have been working with the rental of equipment, we had a very important learning curve. And the result of that is that we have 8.5 years as the average age of our equipment. And in spite of that, our margins are practically back to historical levels. This all comes from all this learning from optimization and the purchase of the spare parts optimized as well. And this is why we are being able to extend the life of our equipment. And we do not see in the short run any impact regarding the maintenance cost of the equipment or the TCO. And when we have the CapEx for the renewal and the growth, we maintain the average age of the fleet, bringing in new equipment. This is why we have this cost ratio. So we do not expect any negative impact because of that. One question. Caroline, welcome aboard. I'm also a shareholder and I'm a big fan of the company. I would like you to talk about the optimal capital allocation. We understand that the company is net cash. We understand you are net in terms of cash and is not the best capital allocation. As shareholders and analysts, we like to see growth. And in Brazil, the GDP is being constantly revised. Some economists are going to be ashamed because of their forecasts. And this +1 or +2 is being driven by infrastructure. So I would like to ask you, of course, I know that you have just started in the company, but what is your concept for the company of an optimal capital allocation? You have a lot to pay, you have some debt in the company, and how are you going to use this capital? Thank you. Thank you, Carlos. I just came on board this week, so I'm starting my integration. So I have to ask Sergio to help me, but certainly we will be very careful in terms of capital allocation after a lot of analysis and opportunities. And this was my area in my previous positions, and we will be very thorough in this analysis. Answering your question, we're not in the optimal point yet in terms of our capital structure. Of course, what we seek from now on is not only organic growth in terms of acquiring more lift platforms, and also inorganic growth, and also getting into the diversification of our product line. And we see a very good opportunity, a very major demand for other product lines, and it would make sense for the company to allocate capital there and thereby improving our optimal capital structure. This is going to be one of the major challenges, and Carol came on board in order to help us in this regard. So we are going to look for new lines. Also, in order for us to extend our rental contracts, bringing more revenue into the company. And there are many challenges involved in the optimization of the company's capital structure. We will tackle them. Fernando, investor. Are you thinking about new acquisitions? Well, we have a team which is dedicated to that, to inorganic growth. Of course, along with the overall strategy of the company, not only for the existing product lines, but also because of new product lines. So a full team is devoted to that in the company. Rodrigo Fonseca. What about the exchange rate hedge? Rodrigo, we were able to hedge a part of the hedge. In a way, we have a natural hedge of our equipment, but we did hedge part of that, and we were able to do that when the dollar was depreciated lower than 5. So part of the acquisition of $70 million we did do with the exchange rate hedge. Luis Claudio. Congratulations, Carrie and Camila. Welcome, Carolina. How many acquisitions have you made in the last 2 years? And what about the integrations, the systems integration, but also the synergies from these acquisitions in the last couple of years? Thank you for the question. Undoubtedly, it is always a challenge because of the volumes involved. Many acquisitions bring a higher degree of complexity to our operations, and we have been learning a lot. This is what I can say. The first merger with Solaris was very complex, then the SK acquisition, and we learned on the way. And more, we are doing this. And regarding the systems, we have been integrating them in the current systems of the company. We observe the best practices in each one of the acquirees, and we learn from them. But when we integrate 100%, you have the legacy of the other companies, and we absorb the legacy in Mills. Some of the acquisitions, such as Rohr and Autoplat, we had asset contracts because it is much simpler. You just integrate the equipment to the system and you integrate the clients. This is simpler, but the idea is to create, and we have been creating this, as I said in my presentation, as a process so that we may continue to do this and increasing the speed and having a lower impact on our operations. Augusto Tadeu, analyst. He would like to ask a question about new offices. Good morning, Sergio, Camila. About the new branches. I would like to understand the economics of the opening of these new branches. What is the average CapEx for each one of the new branches? How many machines are going to allocate to them, the allocation, the CapEx of the machine allocation and also the land necessary? And what is the maturity curve? Thank you. Augusto, thank you for the question. We do not talk specifically about the economics of each one of the branches. I'm going to talk about the ballpark figure, okay? We carry out an analysis about the locations of the main demand or the higher demand because we have the additional challenge not only to penetrate with our machines, but also the concept and the product. So we send a commercial team in order to start to spur the local demand. So we do this at a distance at the beginning, and then we have a feeling of whether the theory is translated into the practice, so that we may mitigate any possible mistakes and decrease the curve so that we don't have a very long maturation. We do not do a CapEx for the location. We have the address, but the effort CapEx vis-a-vis the assets is slightly lower than our average, because in Brazil we have larger machines and we usually have 50 to 60 machines that go from very small equipment up to 20-meter boom cranes. And we start to engage the utilization this way. And what I can say about the performance of the 10 branches that we opened last year, they are still very new, but they are already generating very good margins. And we can have more interesting prices being charged in these new locations. This is all I can say. Thank you. In relation to the average margin, on average, the margin is slightly higher. At the beginning, it is slightly lower, but then after some time, it is higher than the margin that I have in Brazil. I still have some branches in Brazil whose margin is smaller because of competition usually, and this drives the margin down. But in these new locations, the margin is higher. Thank you. I would like to remind you that in order to ask a question, please press the Q&A button on your screen and write your name, the company name, and the language. Then you will have a request to activate your microphone on your screen, and then you may unmute your microphone. The Q&A session has come to an end. I would like to turn the floor over to Mr. Sérgio Kariya for his closing remarks. You may proceed, Mr. Kariya. Thank you very much for participating in our video conference about the first quarter of 2022. Our investor relations area is available to you should you have any additional doubts. Thank you very much. Have a good day.